course, the price of bread might well become a political issue. Who knows in this election? Sifiso Skenjana is the founder of ESG Analytics. He joins us now. Sifiso, good afternoon to you. I imagine you're going to join the chorus. No surprises here today.
Good afternoon, Stephen and Chimusang, and of course to the viewers at home. Yeah, I think no surprise. I think, but there are a couple of things just to note there, and I think Chimusang has alluded to some of those things. There was a revision of the PPI basket, and a lot more food items are going into the PPI basket. I think that's going to translate into a higher CPI number. And I think that's already coming into then, in essence, what's being modeled in terms of higher, expectations from an inflation point of view. Also, what the governor spoke about is around the rand being devalued, particularly on the back of the emerging or developed markets, rather, keeping their interest rates a lot more elevated, and of course Japan being an interesting one, finally getting into positive interest rates since 2007. And all of those things lead to, one, of course, a higher inflation expectation pathway. And then, of course, the governor, which is quite interesting for me, Stephen, is finally now stepping away from their relationship with National Treasury around administered prices. Administered prices are some of the largest contributors, and they're in double digits in terms of inflation of administered prices. And that comes out of National Treasury, and so National Treasury in and of themselves are also contributors insofar as how they put tariffs on administered prices for the inflation outlook. And so when we look at the broader basket, all the drivers around the central bank's position on interest rates, I think it's actually a bit of a dogfight at home.
Sifiso, to be saying here, outside of inflation, there is a revised GDP expectation from the Reserve Bank. 0.6%, is it too optimistic given the current climate?
Yeah, I think it is optimistic to me, Sam. I mean, look at our GDP print. We just scraped coming out of a recession. Again, on the back of that GDP print, I think there were a number of questions that we did ask where you look at a lot of the things that were apportioned in terms of where the GDP came from. It was thrown into a basket called miscellaneous and really not showing sector strength. And so certainly for me, I think there is a question mark around the quality of our, or the strength of our economy at this point in time. Looking at the global economy, of course, we've seen a couple of the global countries, who are trading partners coming under stress. Germany in recession, UK in recession, Southeast Asia also coming under pressure. And these are all our trading bloc partners. You go into the continent, 28% of our exports go into the continent. Nigeria is really struggling with that currency devaluation. They also just increased 200 basis points on their part as well. Ghana is struggling. And so I don't have a sense that there's a positive uptick that is coming in terms of wins coming from the global economy. If the modeling is only coming on a reprieve from a load shedding point of view, given the fact that they said last year it took off 1.2% from GDP and they're expecting only 0.6%, I think that is wooden dollars and is not really translating into a view of the health of the economy.
I was amazed to hear the governor being so optimistic about load shedding, Sifiso. I thought optimism around the end of load shedding really had sort of fallen out of the window. It does show you the impact load shedding still has.
No, Stephen, I mean, it really does have, of course, quite a large impact in terms of course, production levels for mining, manufacturing, etc. But just on the back of even the last conversation that we did have, however, we heard the governor talking about a lot of the inflation is coming from services inflation, mimicking what's happening in the global economy. And that is a sector that isn't as directly impacted from a production and output point of view, from a load shedding point of view. And so when we overlay an impact quotient in terms of, one, the sector that is contributing about 24% of our GDP, imported inflation coming through the currency as well as the services sector, I think we are overplaying the story around the impact of load shedding, particularly at a marginal contribution point of view at a sectoral level, given that the sectors that are contributing about 50% of our economy are as government services and personal services as well as financial services, which is the part that is then driving, of course, the imported inflation as we're seeing globally.
Sifiso, I'd like to take you back to the tone of the Reserve Bank governor this time around, particularly because it's an election year, and he stressed the point that unanimous decisions do not come easy given the diversity of the Monetary Policy Committee. What do you make of how he basically outlined and stressed that there is independence there basically on the thought process as well as the deliberations that the MPC has and how vital that then plays into sentiment in a year such as 2024 when we go to the polls?
Sure, I mean, the number of drivers from a sentiment point of view, of course, and I guess the sense of independence at a governor and a deputy governor point of view, I think, is quite important. And so I think stressing that, I think, is, again, continuing to reiterate that there is, in essence, a contestation of ideas, and therefore, whatever decision is reached upon, I think he's saying this was a robust process. The only challenge we have here is that there still isn't transparency about, for each candidate, what are the things that they consider as material insofar as the decision that they make. Even when you've got consensus or divergence of ideas, I think we don't have any transparency around ultimately how each candidate arrives there. And I think that's quite important in terms of really, I think, opening a new wave of governance and transparency around that particular interest rate decision, given the extent to which it impacts ordinary South Africans. Moving, of course, into the policy uncertainty space as well, I think the governor did iterate, because it is election season. But also South Africa is the 21st, or the rand is the 21st most traded. I think it's actually 19th most traded currency in the world. And so any policy uncertainty, of course, also just results in a little bit of volatility from a currency point of view. And that, of course, I think results in also what the Reserve Bank governor talked about as us being in a relatively undervalued position from a currency point of view. And I think we're probably going to hover around there until we've got a view around election outcomes later in May.
Following up on this idea of independence, it was interesting to see the question and the answer from the Reserve Bank Governor, Skenjana, about whether or not we follow the US Federal Reserve. As the way he put it, the quote I captured, he said, "We don't follow the Fed, we watch the Fed." Does the evidence show that, or do we really follow the Fed?
I think, Stephen, there's probably a heavier hand based on what happens from a Fed point of view because of our carry position, which is a differential between our interest rates and their interest rates. Of course, what happens, when the Fed increases or holds their position, it weakens our cost of borrowing and in terms of our long-term bonds. And so when you look at the trajectory of our long-term bonds, that has weakened over the last 3 years since 2019 vis-a-vis the US. And so that's quite a material impact it's got in terms of the choices that are made. Also, insofar as we have imported inflation that is, a function of our currency level. And so when our currency is that much impacted and therefore the interest rate is decided primarily on the price path of inflation as well as the growth outlook, the price part becomes very impacted by the choices that are made in the US. And so I think watching is probably a little bit polite on his part, but I think it is around more of we pragmatically respond to the risks that emerge on the back of the decisions that they make.